George of the jungle, strong as he can be.
Okay, this is going to be a little bit deeper dive into some numbers here, but how do you refinance or how do you purchase a home if you already own a home and it's inside of a Chapter 13 bankruptcy? That's what we're going to be discussing in thecreditjungle.com today. And it's kind of interesting. I had a comment on one of my videos and it was just saying, hey George, I'm a loan officer and you're giving me great tips. Thank you. I've been in the business 31 years, and honestly, most lenders, are not going to sit and watch another lender's video on how to do something, so I'm not worried about that. This is really for consumers. But if somebody's out there, I have an abundance mentality, and I'm not going to get every single loan that's out there, and Utah is a relatively small market compared to what else is out there. So if there's people outside the state or wherever, even if they're in my own state right here in my backyard, I'm interested in people getting good advice and not getting themselves in a compromising position when they're trying to sell a home, buy a home, and then they get this gotcha moment where, oops, you don't qualify because something wasn't figured out. So I'm happy to help on here, and I really don't have any problems at all that somebody else is benefiting from this information, because I wouldn't put it out there free of charge if it wasn't, meant to be for everybody. So anyway, a Chapter 13 bankruptcy, going back to the Chapter 7, we're going to have the same thing again. The mortgage company is going to stop reporting to the credit bureaus. So up to the petition date, you're just going to see, it's just going to show what your payment is, what your balance is. On a Chapter 13, it might show what some of the mortgage arrears are. It could show that as a past due amount that's included in a Chapter 13 bankruptcy, but there's not going to be a current rating or status on whether the payments have been made on time, and it's going to be very difficult to get. So I want to give you an example on this. If somebody had say they had a $2,000 a month mortgage payment, and at the time that they filed the Chapter 13, they were 6 payments behind. 6 times 2 is $12,000. So you're going to have $12,000 here of what are going to be considered arrears. Sorry, those are arrears. Might not have heard that when I was speaking to the whiteboard, but when I'm speaking to the microphone, you can. So these arrears are going to be put into your Chapter 13 plan, and your Chapter 13 plan might be a 5-year plan, and based on your budget and your income and everything else, just say you get a planned payment that's going to be $500 per month. We talked about this previously. The attorney's fees are an administrative claim on the estate of the debtor. So they get paid first, even before priority secured creditors, which is what your mortgage company is. So if the attorney's fees were a few $1,000s or whatever, you're going to have your first 5 or 6 payments are going to basically go to pay attorney's fees. And then how many more months after that, all the money that's going to go in here, pretty much 100% of it, is going to go to pay the arrears. So you're looking at here another 2 years of making payments on the arrears. So on this example here, we're going to be at probably at least 30 months, 2.5 years into the Chapter 13 before these arrears are paid off, yet supposedly you can refinance after you've been in 12 months into a Chapter 13. Well, that's kind of a gotcha. So first of all, if it's not reporting on your credit report, how would the underwriter know that there's arrears on there? Well, if it's not in the credit report, it shows up on the payoff statement. That payoff statement to the lender is going to show that if you've made maybe a few $1,000s of payments here, it's going to say, well, here's the regular payment, but we got $9,000 in arrears. The underwriter is going to know that there's a Chapter 13 bankruptcy. You're not going to be able to include those arrears in there for a Chapter 13 bankruptcy. So under these circumstances, a refinance is not going to work. Okay? Now, does that mean that you can't sell your home and buy another home? No, you actually can. So you could sell the home because your mortgage rating, we're going to get a VOM here as well, and if they give a mortgage rating that shows that you've been making your planned payments according to the schedule, then you're going to be able to get the go-ahead here, and then you can sell and purchase another home, where it's actually easier to do that in a Chapter 13 than it is to refinance. If you're going to refinance, and I've had a couple of rare occasions where you can go back and get this VOM, and you can have them give you the payment history, and they'll say, oh yeah, he's made his payments on time for 12 months. And depending on a lot of circumstances here, sometimes they could take those arrears and add them into the principal balance and not show them as a separate line item. Very unusual that you're going to get one of the big banks to do that for you. So I've had a few instances on there. Don't plan on it, but it is possible to be able to pull that off if you have a bank servicing department that they basically want to get rid of the loan. They might help accommodate that. But you're going to have to do your part. You're going to have to make sure that all your planned payments were on time to the Chapter 13 trustee. So if you're stuck on that and we can't add the arrears into the principal balance, if we can't get a good verification of mortgage to say that it's current, then to be able to refinance while you're in a Chapter 13, you're going to have to wait until those arrears have been completely satisfied. So you could be in a situation where we are looking at 30 months down the road to be able to do that. And if somebody's in this kind of a situation, I found out there's a lot of cool things that you can do to kind of help somebody improve their credit, which is perfectly legal, does not require permission from the trustee. I've talked about this in another video, but you can actually work on raising your credit score. And I had, not too long ago, I had somebody that was in an open Chapter 13 that had a low 700 middle credit score. So it's not impossible to be able to do it, but you have to have everything working in your favor. And we just want to discuss, what those options are and how this affects you. And it's better to find this stuff out at the time that you're taking the application, not when it gets to the underwriter. And unfortunately, most lenders have not dove into the weeds on this. They look at the credit report, they think everything's fine, and heaven forbid, you could have another home under contract, you could have an appraisal that you've paid for. I mean, you could have a lot of things, wheels in motion, and a lot of expectations, and a lot of emotional expectations that you've got this transaction going to happen, and all of a sudden the underwriter kills it. It's so much easier to find this stuff out. I can go in and look at the trustee disbursements from the trustee's office. We can set up an online account. We can look at that the day that you were with me on your loan application, and we can find out exactly what the balance is on that arrears. And that's the time to do it, is up front, not to let the underwriter figure it out, and then 3 to 5 weeks later, now you find out you don't have a deal. So thanks for coming into thecreditjungle.com today. This is George Anderson. Push button, get mortgage professional. I would love to help you with your situation. Have a great day. I hope to see you soon.